Almost all valuation is done on a relative basis. This may be very explicit in the model, or it may be hidden deep implicitly in the model. How do people get the relative information to do the valuation? Well, a lot of it is based on the industry in which a company operates. So let's do a deep dive into how to get this industry information. The Global Industry Classification System, also called GICS, helps define sectors, industry groups, and primary industries. It's got a number of sectors that are important to understand. There are 11 sectors. They include energy, materials, industrials, consumer discretionary, consumer staples. You've got healthcare, financials, IT, which is information technology. You've got communication services, utilities, and real estate. And each of them has their own characteristics. And most importantly, when you're doing a valuation of a company within these industries or these sectors, they tend to have the same approach to valuation. The companies are often in the same life cycle, and they often have the same type of characteristics that facilitate using a particular approach to valuation. So let's dive into Capital IQ and learn more. Industry analysis is a very important part of valuation. We know from surveys of equity analysts that their selection of valuation methods depends on the industry or sector in which the company operates. So we'd like to take a closer look at how to get industry information using the Capital IQ database. And I want to approach it from two perspectives. The first perspective is, what if we have a particular company? How do we figure out what its industry classification is? And the second perspective is, what if we start with an industry? If we know an industry, how can we learn more about the operating metrics associated with that industry and the financial metrics associated with that industry overall? So let's start with Capital IQ. Again, I'm just going to this homepage. This is capitaliq.com, which I'm accessing through a web browser. And I'm going to start off with a particular company. Let me pick one, and I'm going to type in its ticker symbol in the search bar. This is the ticker symbol for Dunkin' Brands Group. Many of you may be familiar with it. It's a company that sells a lot of coffee, a lot of donuts as well, but it also owns Baskin-Robbins, and it operates internationally through that. It's based in Massachusetts, but what is the industry classification? Well, here you've got the primary industry classification, and it's a restaurant, but let's get some more information about it. You can see that it actually has two industry classifications. It's in the consumer discretionary, and it's also in the financial. But its primary industry classification is that of a restaurant. And that is actually in the consumer discretionary sector. And you can see that there are industry groups within that sector: consumer services, hotel, restaurants, and leisure, and then there are restaurants here. So you can even get the SAC code associated with this, which is a standard industry classification. It actually is a retail bakery, but what I really like to see is this industry classification right here. It really adds a lot of value. It's a little challenging in the sense that companies can operate in a variety of different industries, but this one is this one's really its primary industry for sure. It's not just 51%. It really is a restaurant business. You can drill down into this after you get this industry profile, and you can get constituent information also, and you can see it actually gives you a lot of restaurants here. It's a huge number of them, of course. McDonald's being a main one, Starbucks, of course. There are some that are very similar to Dunkin' Brands. Starbucks is a great example. McDonald's serves a lot of coffee too, but they do so many other things. Coffee is not their primary business, unlike Starbucks and some of these other companies. So that helps you a little bit, but let's take a different perspective. Okay, so that was the company perspective. You use that search bar at the top of the website to put in the ticker symbol or search for a company. Then you figure out that industry classification. What happens if you want to start with the industry? This is the second perspective. What I'd like to do is start off by just taking a look at a broad index. One of the most popular indexes is the Standard & Poor's 500 index. And the symbol for that
is Caret SPX, and you can see it right here. You could, of course, search for the name, but a lot of these indexes start off with this caret right here. So I'm going to pull this one up. It takes a second in Capital IQ, and you can see it's got the index profile for this particular index. If you want to look at another index, there's a mid-cap index as well, which has got 400 stocks. It's actually Caret MID, and it will take you to that, but it's pulling up the information for the S&P 500, so let's stick with this one. There's a wealth of information here. What I really like to focus on is the particular sectors within this index and the industries and stocks within that. So I'm going to scroll down. One of the great things that it offers here is this breakdown by sector of how well the companies are doing in terms of their EPS. You can see this is for the calendar year 2017. The data point is EPS, and you can see all the sectors here. You've got utilities, real estate, materials, all the sectors. How well did these particular do? Well, for the S&P 500, 366 of the companies in it actually beat their EPS expectations. 38% of them basically met and 93 missed. So 2017 was obviously a very good year, but it varied a lot depending on the sector. You can see the communications services, not so good. And materials, it was actually pretty good. None of them missed, which is really surprising. So the analysts had expectations that were far too low relative to the earnings per share performance for this particular sector. What I like to focus on is this constituent summary. Let's pick the industrials. So I'm going to zoom in a bit. And this is the S&P 500 industrial sector. What if you wanted to learn more about the sector and also perhaps an industry within this particular sector? I'm going to click on this, and you can see that, sorry, I'm going a little too fast. Let me go back to this industrial sector. Within the sector, what you have is 3 industry groups: commercial and professional services. You've got the capital goods industry group, and you've got the transportation industry group. So remember, this global industry classification system called GICS is actually very much like a pyramid. And so you start off with that sector, and then you work your way down from industry groups into industries. What if we wanted to learn more about this capital goods group? Well, it's got things like aerospace and defense, construction, electrical equipment, a lot of these machinery. What if you want to drill down in one of these? So let's take a look at aerospace and defense, and I'm going to click on the actual name right here. And you can see that you get a lot of information here. What are the constituents associated with it? We can drill down into the sum industry, and we can see actual companies here. Many of these are likely familiar to you. Companies like General Dynamics, Lockheed Martin is a huge defense contractor. Huntington Ingalls makes ships for the Navy. Boeing, of course, United Technologies. These are all companies that are very active in aerospace and defense. But what if you were trying to evaluate the relative position within this industry? You're able to get, on this left-hand side, key stats overall for the whole industry in terms of how much it's growing per year. When you see these dates here with the E's, that's an expected number. So you can see expected for 2019 and 2020, how much growth in revenue the industry is expected to have based on analysts. You can see the gross profits and how the margins have changed, and the margins have been very stable in this particular industry in terms of the gross profit. Net income has actually been pretty stable over this time period as well. Somewhere between 7.5% to 9% is what they've experienced in recent years. If you want to get multiples too, to me this is a lot more valuable. You can access it from the left-hand side or up here at the top. And you get a lot of ratios, things like price to earnings, price to book value, enterprise value to total revenue. And you can compare a particular company with the overall industry average. So I think that this is really a wealth of information. And again, what we've looked at is exploring it from different perspectives. You can start with a company and you can get to the industry, or you can start with the industry and get to average information for the companies within that industry. So remember, you're trying to, a lot of valuation is done from a relative perspective. You try to identify a similar group of companies, these are peers, and then you can use that in terms of valuation to see whether your company that you're trying to analyze is appropriately priced relative to other companies, similar companies, like those in the same industry.